Hello and welcome to a brand new episode of ET Markets AIF Talk, a show where we discuss the opportunities as well as strategies deployed by the fund managers in the popular space of ultra HNI investing. My name is Shadhajanand, and today we have with us a very special guest, Vikaas M Sachdeva, who's a managing director at Sundaram Alternates. Welcome to the show, Vikaas.
Thank you so much. Thanks for having me.
Thank you for being part of the show, Vikaas. Now, uh, if we want to look at the AIF space in entirely, let's also first focus on the growth trajectory that you've seen for this space, let's say in the last 5 years. What is the size of the AIF industry here in India, and can they become as big or popular as MFs in the next 5 to 10 years?
Okay, the first question is fairly easy to answer. The second question will be a little bit of crystal ball gazing on my hand.
Sure.
But if you're looking at the growth of the AIF industry so far,
Mhm.
it's basically a proxy to the growth of the ultra HNI and HNI segment in the country. So before I actually tell you what has been the growth, I think it will be worthwhile to just examine how wealth has actually increased over the last few years in the Indian subcontinent. Now let's look at the number of HNIs, the quantum of HNI. They're typically defined as net worth above 1 million USD, and ultra HNIs, which are net worth above 30 million USD. Okay. In India, it's
Mhm.
expected to grow by 75% and 40% respectively
Okay.
over the next 5 years. Okay. So that means the number of HNIs and ultra HNIs are going to grow by 75% and 40% over the next 5 years.
Hmm. Hmm.
India currently has 115 unicorns,
Right. Okay.
which is expected to go to at least 150 by 2025. And that is all, and all of this is generating millionaires and generating wealth. Around $30 billion will be invested in startups by family offices in the next few years. Family offices are a big source of capital to startups, right? And if I have to give you one telling statistic, when China crossed $2,000 per capita income way back in 2005-6, at that point of time, they had 4.15 lakh millionaires. India has just crossed $2,000 per capita income a couple of years ago, and we have 7.65 lakh millionaires. So what you're talking about in this country is the growth of wealth as well as the wealthy. Now, typically what happens is, uh, when you're talking about a mutual fund product, it is converting savings to wealth.
True. True.
When
Yes.
you're talking about a product catering to HNIs and ultra HNIs, it's actually creating a wealth into abundance or wealth into legacy.
Mhm.
So the way this entire industry will grow will be slightly more different than what you have conventionally seen in other forms.
Yeah.
One of the primary reasons, again, why this industry is growing is while people have money, there are also requirements which people have.
Mhm.
People with private capital or capital for a longer period of time, they have requirements. For example, creating new sources of alpha. You already have public markets, for example, as a very classic source of alpha.
Right.
But is there a new source of alpha which is available? Can there be diversification to reduce concentration risk? Are there emerging opportunities? The typical HNI, ultra HNI today is in the bedrock of information. He's seeing what is happening across the globe. And he's asking, is there something I can invest in this country through a particular platform? Reducing overall portfolio risk, and of course, bringing down the portfolio volatility. These are some things which an ultra HNI or an HNI will look at. And these are requirements which are being met by the alternate industry. Now, if you see the size of the industry currently, and I'm now saying looking at the past, it's currently around 7 lakh crores
Okay.
as compared to 2 lakh crores in 2018. So it's just 5 years and it's grown. Cat 2 and Cat 3, which are the more popular, variable variants. In fact, that is where most of the HNIs, ultra HNIs invest. They've almost doubled. 23% has been the CAGR over the last 5 years.
Okay.
If you're talking about Cat 2 funds, which
Mhm.
is venture capital, debt, etc., they have grown over the last 5 years by a CAGR of 57%. In fact, the amount of commitment which has come in from Cat into Cat 2 has been from around 1 lakh crore to 6 lakh crores. And if you look at Cat 3 funds, it's grown by 5x over the last 5 years with a CAGR growth of 37%. Why? Because the ultra HNIs requirements are being met. If you're looking at ultra HNIs, and I will explain that to you as we go along if we have the time, they're looking at a pool of investors with the same mindset to invest in a particular fund. You're looking at emerging opportunities. You're looking at higher risk, higher return, longer term opportunities. So all of these requirements are being met through the alternate investment platform, which is why you're seeing the stupendous growth. Can it be as big as the mutual fund industry was your next question?
Yes, yes, yes.
Well, in terms of popularity, yes,
Yeah,
I think it is increasingly be sought about.
right.
But size may not be an apple to apple comparison. I think mutual fund industry is far bigger in terms of size. I think they cater
Mm,
to a
mm,
much
mm.
larger strata of population, and
Absolutely.
it is just about increasing.
Mm.
AIs will definitely increase in popularity, but in terms of size, I hope so.
Yes, we'll keep our fingers crossed. But you did touch upon the different categories which the AIF offers, that is Cat 1, Cat 2, and Cat 3. Now, a little bit on how has this space changed over time, and which category is actually attracting the maximum interest in the industry?
So I think if you see there are variables or there are factors which have started to work in favor of the alternate investment fund industry.
Hmm.
For example, if there is a portfolio concentration product which you require for a longer period of time in equity, you have a Cat 3 fund. If you look at private equity or if you look at private capital,
Okay.
you see, credit has acquired a sort of a diffused image over the last few years. But credit as a product is actually born for private credit AIFs, because here the investor comes with a 5, 6, 7 year time frame.
Right.
If it's a public market product where you have a put option where the investor can exit at any given point of time, the debt markets are not as liquid or the credit markets are not as liquid, right? So that is the reason why the sort of flow which has started coming into AIFs has been pretty sizable,
Mm.
albeit at a lower base. For example, if you look at Cat 3 over a 7 year time frame, the number of funds which have been launched, they've grown at a CAGR of 32%.
Mm.
The commitments raised by Cat 3 AIFs have seen a 35 times growth over a 7 year time frame. I'm saying at a lower base, but this is still quite sizable. In fact, Category 2 has been the fastest growing category with a CAGR of around 70% over the last 7 years.
Mm.
And this is expected to accelerate going forward. One of the reasons is that, anyway, I will come back to that later. But one of the reasons is that a lot of investors are now seeking to add more and more AIs to their overall pool
Okay. Okay. As part of diversification process.
as part of diversification.
Well, because you are an industry veteran and have recently taken over as the MD for Sundaram Alternates, now take us through the product profile across categories.
It's a great learning experience and a great sharing experience which I have with the team. I think there's a lot of ideas which keep getting banded around, a lot of risk management frameworks, investment committee frameworks which keep getting discussed. But to talk to you about our product suite, I think it is necessary to actually see where the market is growing and
Hmm.
how we're positioned for that.
Right.
If you look at over the next 5 years, uh, 57%, there was a recent survey done.
Hmm.
57% of people actually said that they want to increase their AIF allocation from 5% to 10%.
Okay.
Okay. That's a very sizable thing. That means of the existing population, which is less than 5% in
Hmm.
the ultra HNI segment, more than half of them are saying they want to increase it to 10%.
Right.
Okay. Over the next 5 years.
Hmm.
The second thing is if you look at manufacturers like us,
Hmm.
they were also surveyed. 60% of the manufacturers say that their target for raising money over the next few years is at least 1,000 crores. Okay, so you're talking about a sizable number of things. Now, if you talk about the industry, I think the equity part of it is fairly well established. And if I have to talk to you about the private credit part of it,
Hmm.
that's something which the world has already woken up to. Globally, 15% of the alternates industry is into private credit. In India, it's just about starting. If you look at it, if you have to become, for example, this is a rule of thumb, if you have to become a $5 trillion economy in the next few years, credit will be required to the extent of 2 to 2.5 trillion to fuel that sort of growth.
That's good. Yeah.
In fact, only in private credit, it's expected that over $50 billion worth of opportunities will come up in the next 5 years.
Hmm.
Now, we've talked about debt, we've talked about equity. What is Sundaram doing? Sundaram is actually present across two platforms. We are a subsidiary of Sundaram Asset Management,
Hmm.
and we're a specialist alternates firm. We deal in PMS and we deal in AIF. In terms of AIFs, uh, we have a category 2 offering. We've had 3 real estate credit AIFs which were offered. We've raised upwards of 1,500 crores there. In fact, very recently, we returned back over 500 crores to investors with an XIRR of 15.6%.
Right.
And I've been told informally that probably in the last 10 years, we are one of probably the only or maybe one or two more real estate oriented funds which have actually returned money in toto to investors with a return, right?
Wow.
And I can explain to you why also. So we've got that. We've recently launched a performing credit fund. Now,
Okay.
like I told you, credit in the mutual fund space versus credit in the AIF space. I
Hmm.
think these are structured deals which happened with a cross section of smaller entrepreneurs,
Hmm.
and this is a burgeoning segment. In debt, you have various layers. You've got venture capital debt, you've got distressed debt, you've got performing credit. We are sticking to performing credit because that is what we understand best.
Hmm.
And there, I think we've raised some sizable amounts of money. We're nudging 500 crores in one of the funds there.
Okay.
So that's as far as credit goes. We won some awards there as well. In terms of equity, we are present both in the PMS and the AIF platform. Okay. In the PMS platform, for example, we've got 5 differentiated offerings.
Mhm.
Average track record of 12 years. Average alpha over benchmark is around 7%, 6 to 7%. This is post expenses over 12 years that we've generated an alpha.
Right.
And I love to add that average number of awards won every year is around 3 awards for
Okay.
each of these products.
Right.
They are recommended by a cross section of distributors.
True.
That's on PMS. On the AIF platform, we have an open-end AIF and we have closed-ended AIF.
Right.
So we pretty much have everything in terms of what the customer is looking for, and we can
Hmm.
give it to him.
No, absolutely. In fact, you have a diverse portfolio mix as well as diverse product offering across segments. So that's a very good thing. And many investors as well as institutions could take could actually go and invest with Sundaram. Now, one more thing, AIF actually caught the fancy. We've been discussing about this particular a topic. Once we started off with the conversation, you categorically detailed what HNI is and what ultra HNI is. Now, so our the very reason I'm coming from is that do HNIs or alternate HNI investors are looking for diversification through alternates to maximize their risk-adjusted returns? Is that one of the reasons, or it is one of the ways where HNIs can invest in private equity and debt? So, which category is actually looking more alternative or lucrative for HNI alternate HNI investing? What are your thoughts on that, Anthony?
See, like I said, if you understand the psyche of an HNI investor, he is not looking to convert savings to wealth. He is in fact looking to convert wealth to abundance or wealth to legacy.
Hmm.
So pretty much, we believe that the HNI segment is very aggressive and they can take a lot of risks. That is not entirely untrue, but most of the HNIs have a mindset that I'm taking enough of risk in my core line of business.
Yes.
So when I'm giving you money, I don't mind giving you money for a longer period of time.
Hmm.
That's okay. I can understand volatility, I understand this.
Hmm.
But my primary objective of giving you money is wealth preservation and growth at a faster rate than what I can give anywhere else. So he's not looking at 30% CAGR.
Right.
Okay. He's saying if the average return I'm getting across all my other assets in a similar asset classes,
Hmm.
I'm getting 12%. I will expect 14 to 15%. I
Hmm.
will not expect 20%. Because for him, capital preservation is very, very important. It's a trade-off you have to do.
Hmm.
So that is their goal. Why they have started liking or why there is an affinity
Hmm.
towards alternate investment products is, like I mentioned, I think this is a very smart animal. They know how to plan their taxes very well.
Hmm.
They know what is risk. They will give you private capital 5 years, 7 years, 10 years. In
Right.
fact, most family offices are a proxy of
Hmm.
what the HNI mindset or the ultra HNI mindset is, right?
Hmm.
So they understand all of this. They have some very smart people who work for them. What are they looking for? They're looking for innovation. They're saying, what can I get which I cannot get otherwise? So can I get private equity? Can I get venture capital? Can I get direct private deals? Can I get alternate debt? Can I get hedge funds? Probably
Hmm.
all of this is
Hmm.
coming in through from the AI platform.
Okay.
Second thing is they say that they believe that uh, their mindset and all the other investors who are into a particular pool for a particular objective, they should have the same mindset. So
True.
if you realize in an AIF, you cannot have more than 1,000 investors.
Hmm.
Okay, it's a non-standard treatment, which is given to them. I don't want to use the word customized. It's just that
Hmm.
the requirements are laid out, and if an HNI understands that this is for that particular requirement, they will come in, and all like-minded HNIs will come. It's not very broad-based. It's just 1,000 investors.
Right.
The third thing is that you have access to the best minds in the industry.
Hmm.
Here, because the ticket size is 1 crore, and the average ticket size is a little bit more than that,
True.
this particular investor would time to time want to confer with people who are managing their money. And this is direct access which you can get, which is very difficult in a public markets platform otherwise. Yeah. Last but not the least, there are curated products which can come in. I think a fair amount of innovation also happens because there is a certain requirement which a certain section of HNIs will ask for. It could be on the LRS front, it could be on the hedging front, and they say, can you think of something and come back to us? Okay. And AIF platform has the wherewithal in terms of curating products according to the HNIs requirement. So looking at that, I think some industry estimates have shown that over the next 5 years, the alternatives AUM should increase by 11.5% CAGR globally.
Globally, right.
Okay. And private equity and private debt would be one of the fastest growing asset classes. And I have reason to believe that the same might happen here.
No, no, absolutely. In fact, we've been talking about Sundaram, and it's a big group. Take us also through the synergies with the business share.
Well, actually, I was talking to somebody the other day, and we were talking about the good old days in the 90s, when there was an NBFC boom, for example. And then there was an NBFC crack, which happened. Okay. And I was very pleasant. So you hear these war room stories when you go out in the industry, you talk to HNIs who've been around for a long time. And one of the key things which gave people a lot of confidence even around that time is Sundaram was one of those NBFCs which actually said that when the time comes to return money, we don't want to be even a day late, even an hour late.
Okay.
Okay. You remember there were no RTGS facilities at that point of time.
Yes.
So checks used to get printed and sent across to respective branches to be handed over to the investor one day in advance. In fact, it so happens that, and this is again those war room stories, that machines, printers were sent across to all Sundaram branches in key locations just to ensure that the check printing and dispatch doesn't take time. The dispatch is no variable there. You just print and give it to the investor. That is the sort of confidence people have in the brand. It's a conservative brand. There is. So one of the things you should know is that in an AIF, when we launch, Sundaram invests up to 20% of that AIF. The norm is 5%.
Right.
We can invest up to 20%. So if there's 500 crores we've raised, chances are that 100 crores Sundaram themselves have put in. So it's not just skin in the game, it's deep skin in the game. Yeah. Because at a brand level, we believe that what is good for us should be good for the investor and vice versa. If there's something which is probably going to go wrong, then it should not be a differentiated treatment. It's a very conservative approach towards investing. It's an optimal risk reward ratio, no taking blind bets. And I talked to you about Sundaram being the sponsor for putting in me.
Right.
The other thing about Sundaram Alternates is that, two things about Sundaram Alternates which I can share with you is, one is we are probably the only institution in the country which has two separate managing directors, one for the mutual fund space and one for the alternate space.
Okay.
That is the amount of seriousness which Sundaram has towards the business. And I think an additional point which is increasingly coming across, I think a lot of investors are now saying that while there are a lot of boutique firms in the alternate space, we would want to have something which more of an institutional framework. So what Sundaram Alternates offers is, running with the hares and hunting with the hounds, if you will. We are a startup within the Sundaram system in a manner of thinking, in a manner of operating, but with an institutional framework around it. So that's something which investors like. And of course, the products with good track record, the fact that we are looking at longer term opportunities, and I'm very happy to talk to you about some longer term opportunities, as well as being very client focused. One of the things we are very, very clear about is that the client comes first. And to the extent that if we don't think something is good for the client, we would be willingly, voluntarily going and telling the client, listen, this may not be the product for you.
True.
Once a client invests, we have calls going to a client, in the AIF segment saying that, are you aware that this has happened? Just to make sure that there is no bad experience from a client point of view. So this is what they look towards.
Absolutely. Now we're talking about the client. So, there's an additional question to the same thing. So what do customers basically look at when they actually come and invest with, Sundaram? Although you just you just highlighted and touch pointed a few takeaways for us as well. But anything you want to add on that front as well?
See, I'll tell you what we're talking to customers right now. When we spoke to them, and we've been speaking to them for quite some time, typically two things come to the table. When most customers talk to you, one is the India story. People say that every 4-5 years, manufacturers like you come and recycle the India story. Okay, and then you tell us to stay for the long term. What exactly is long term? So two things. Every time there's a new India story you guys come up with, and what is the definition of long term?
Right.
By the way, this is a common question. It doesn't mean that you're an HNI or a retail to ask this question.
हाँ,
Everybody says. So
right, right.
5 years, 6 साल क्या आप हमेशा आके बोलते हैं.
ठीक बात है.
I mean, to some extent, we
मजाक क्या
also
लगता
look at
है?
the.
That's also very
हाँ.
right.
So we actually, and there is this talk which has been going around about India becoming a Sone ki Chidiya again.
Hmm.
Yeah. So we actually went back and we tried to study, tried to see if history offered us any markers. When you talk to your clients and if you tell them ki this is the time frame you have to look at and this is what you can expect. We've done a lot of research on this. Now I'll give you some examples very quickly. There is a difference between becoming an economic powerhouse, okay, and becoming an economic superpower.
Right.
There are two differences. So once you cross $2,000 per capita income, willy-nilly, you will tend to become an economic powerhouse. Bulk of your population will start spending less on basic items and more on consumption, and then you see a growth. So you've seen that in instances of countries like South Korea, even Bangladesh, Vietnam, all of them have grown, right? But there are only some countries which have become superpowers. So, in effect, if you're saying India will become a Sone ki Chidiya, we want to see whether India is going to become an economic superpower or not. So, if you go back in history, there are several countries which you can talk about. I'll just take two of them. America in 1950 crossed $2,000 per capita income.
Okay.
At that point of time, if you see what was happening around the world was coming out of World War II. There was a lot of desperation, poverty, plague, famine across the country. Even if you look at India, India gained independence around that point of time. Things were not exactly hunky-dory. But if you looked at America at that point of time, America was talking about the American dream. They were the least affected by the war. They were saying that, we've got happy families, fully stacked fridges, fields of corn, we've got tractors plowing, we've got cars going. In effect, what they were trying to say is, what they were trying to promote is consumerism and capitalism. And that gained momentum because of Hollywood. Hollywood exported, that was the pipe which took it to the world. So if you're sitting in Soviet Russia, okay, in the 1950s in a communist country, what you are seeing is basically a very happy America. A happy America's image went across the world. So that did two things. One is it encouraged consumption along the world. So most of the large consumer companies first came up in America. The first franchisee, McDonald's, came up in America, right? And these corporations became giant corporations simply because their products got bought all over the world. Okay. Now, if you look at the per capita income, it just started climbing. From 1950 to 1970, there was a disproportionate growth to the extent that in 1970, the American dream became so strong that it became the reserve currency. The dollar became the reserve currency. And a lot of immigrant population came into America, which further fueled the intellectual boom which happened there, right? In that period, what grew in America was financial services. Okay, I think if my memory serves me right, banks rose from a minuscule percentage of GDP to around 6.5% of GDP. You talked about consumption, which became huge at that point of time. And believe it or not, once America was a manufacturing powerhouse.
Absolutely. Yeah.
Okay, because they were manufacturing all of these goods and services, goods and tractors and machinery and everything which was sent to the world. If you look at China in 2020, rather China in 2005, when they crossed $2,000 per capita income, China's value proposition to the world was very simple. They told countries like America, we'll manufacture goods for you with Japanese manufacturing practices, but at a far lower cost.
Lower cost, yeah.
So the vision China exported to the world was low cost manufacturing capability. Okay, the only condition they had is that you need to have a local partner here.
Sure.
Okay. Now, if you see today, China's per capita income is nearing $16,000. So that's almost a 8 times increase over the last 15, 16 years. And what has grown in China? China has seen a massive surge in financial services. Okay. In 1996, you had only one bank in the top 10 in the world from China. Today, the top 4 banks are from China. You look at consumption. China is not only one of the largest consumers, consumers in terms of whatever is being produced, but today, thanks to the local partners being there, China's share of premium play products is 15%. They're competing with their erstwhile masters, if you will, right? Manufacturing obviously was their USP, but one of the things which China gave to the world was phygital. by making sure that data remained within the four boundaries. They had their own Google, everything was their own version of that. You saw models like Alibaba come up and
Right.
create tremendous wealth,
Mm.
right? Now you look at India. We just crossed $2,000 per capita income in 2020,
Mm.
correct? Now, if you look at it, what is India's value proposition to the world? Part of it we saw in 2000 when we saw that Y2K boom being capitalized by tech.
Right.
But if you really look at it, and three immediate things which come to my mind is you're looking at the Jan Dhan Aadhaar Jam Trinity, wherein through technology, what the developing world is saying, transfer of subsidies without leakages, right? Then the developing countries and in fact the rest of the world, what they're seeing is in terms of UPI,
Mm.
the entire facilitation of cash without physical cash across the globe
Of course.
through electronic means. The third thing, if you take these financial things out, you look at COVID, the way India has handled COVID, in terms of vaccination, in terms of transportation, in terms of COVID certificates. So
Mm.
India's value proposition to the world is low cost tech solutions. Okay. And I think if you start seeing it around, it is being increasingly bought in by the world. So it's very necessary for the world to buy into your vision for you to become an economic superpower. And I think that is what is happening at this point of time. If that is indeed true, going by the examples we've seen in China and America, the four opportunities, structural opportunities which we see, okay, one is financial services, the other is consumption,
Mm.
the third is this whole phenomena of digital,
Right.
and fourth, of course, manufacturing. We are already trying to be a manufacturing powerhouse, right? All our portfolios are heavily skewed in favor of this. So we believe there's a 10, 15, 20-year delta
Mm.
available. We are not looking at a stock. We're not just looking at a sector. We're not just looking at a trend. We're looking at a structural opportunity,
Okay.
which is the overriding trend.
Mm.
And we believe that if you pick up the right sector, the right stock in this structural opportunity,
Mm.
the returns can be disproportionate. So most people are accepting our story, are buying our story, and they say, okay, listen, we understand you're heavily concentrated or skewed towards these four opportunities. And this is what have been strategic markers in the past for the growth of economic superpowers. We are willing to give you money to this extent and will stay the course. So this is one of the value propositions which we are increasingly getting.
Beautifully put there, Vikas. And we also, in fact, we are very much aligned with the vision, and whatever you're saying just do make sense at the end of the day. Also, very quickly, any new product launches that Sundaram is planning in the near future?
Actually, we believe that there is enough of runway in our existing products,
Right.
at least on in the front of the PMS. We are not looking at any new product launches in PMS. But by virtue of the fact that AIF you can have only 1,000 investors, you would have to have new products coming in. And there we would like to stick to our strengths. So on the anvil are some equity and debt funds. And at an appropriate time when we believe that the market is ready for them, we will be launching them. Currently they're rupee denominated, but hopefully on the anvil are also a few dollar denominated products.
Okay.
And we are actively looking at that as well.
Right. On that note, thank you so much for your time, Vikas. And that's all for now. But do stay logged on to easymarkets.com for more on news, business, and economy. Again, thank you so much for your time.
My pleasure, Kshitiz. Thank you so much.